Welcome back to the studio. I'm Michael. So Jerome Powell and the Federal Reserve just wrapped up their statements at the Jackson Hole Symposium, and markets are not reacting too positively. We're seeing Dow Jones, crypto, S&P 500, everything down significantly because of what Jerome Powell said, but really it's not all that bad. In addition to this, we also saw a new report come out from the Bureau of Economic Analysis this morning with new data on what is going on with personal income. So we're going to talk about all of this, and we're going to start off with that new report from the Bureau of Economic Analysis, and then we'll get into what Jerome Powell said. So starting off with that, new report came out this morning on Friday, August 26th, from the Bureau of Economic Analysis. And in this report, they released a key measure of inflation, one that the Federal Reserve watches very closely. And in this report, it showed that that personal consumption expenditures price index came in with a year-over-year rise of 6.3%. But the key thing about this is that it's down from 6.8% in June. And then if you look at the core PCE, which excludes volatile food and energy prices, actually it showed a 4.6% rise year over year and a gain of 0.1% month over month. Basically, it was softer than forecast from all across the board. So economists and analysts were all expecting much higher, but we actually have seen a slowdown for these rates across the board. And if you look at the actual report, you can see that personal income increased 0.2% in July. When you're looking at PCE, you can see it dropped from 6.8% in June down to 6.3% in July. And if you're looking at core PCE, it dropped from 4.8% in June down to 4.6% in July. So ultimately, we have seen a slowdown there, which is a good sign, meaning that everything that the Federal Reserve is doing to combat inflation has been working. But what Jerome Powell said in his interview is that while lower inflation readings for July are welcome, we have seen multiple reports show that 1 month is not enough to really do much of anything. It doesn't guarantee that we're going to continue to see rates fall. It doesn't guarantee anything. He says it's a good start, but we need to see a longer and more sustained improvement in terms of these numbers before we can start really tapering back a bit. So in the meeting at the Jackson Hole Symposium, Jerome Powell sort of addressed this, and he talked about this report, but he also talked about their plans moving forward. So in this meeting, usually they have very long statements. They talk for a while, addressing the economy, inflation, everything like that. But this year, it was a very short statement. It was less than 10 minutes total, his statement. And during his statement, he had prepared, he said that, look, right now, he expects that the Federal Reserve, they are making a stern commitment to halting inflation. He says that he expects the central bank to continue raising rates in a way that will cause some pain to the U.S. economy. He says that even with a series of 4 consecutive interest rate increases totaling 2.25 percentage points, he says there's no place to stop, put a pause on things, because as I said, we've only seen one report show a decline in inflation, and that is not enough. So he said moving forward, while higher interest rates, slower growth, and softer labor market conditions will bring down inflation, they will also bring some pain to households and businesses. And he said restoring price stability will likely require maintaining a restrictive policy stance for some time. That just basically means that they have no plans of slowing down what they've been doing. They're going to continue to increase rates at a fast rate. We don't know if it's going to be 0.5 basis points in the next meeting or if it's going to be 75 basis points. But ultimately what he says is that they need to continue to have a restrictive policy outlook in place for the remainder of 2022 and maybe even further on than that, because they need to see inflation continue to come down. And 1 month of reports like July, which was great, 1 month of reports is not enough to slow them down, because we need to get it back down to that target of 2% inflation. So that's really what's been going on right now. Right now, if we look at the Fed futures rates, still basically split in terms of what the Federal Reserve is going to be doing for the next meeting. When you look at the data right here, it still shows basically 50-50 between what people are expecting out of the next meeting. Is it going to be a 50 basis point increase or a 75 basis point increase? So while the markets have reacted negative to all of what he said, really nothing has changed too much, because he has said that they need to continue to combat inflation. He has said that they're going to continue to raise interest rates. And again, in this meeting, he basically reiterated that. People were hoping he was going to say, well, maybe July was better, so maybe we could slow things down. But he didn't say that at all. He said, ultimately, we need to continue the course, continue what we have planned, and we're going to continue to need to combat inflation with raising interest rates. So that's ultimately what's going on. But I hope you enjoyed today's video, and I'll see you guys tomorrow for another episode. See ya.